All right, everybody, welcome back to another episode here on the Dividend Doggo Show on YouTube, and I'm bringing you into a weekly portfolio review. We're going to take a look at what's been going on this week with the portfolio and see how things have gone. As you can see, we are sitting at about $160,000 in gains out of $634,000, almost $635,000. We have about $35,000 in earned dividend income since August 6th, 2019. And I'm going to bring you in. Here's the weekly view. We are sitting at about $2,900 in market gain and about $310 in earned dividends for the past week. This is the last portfolio review for October because tomorrow is the 31st. So next week we will already be in November. November is going to be a pretty crazy month. Let's take a look and see exactly what's been going on here. So consumer pie, we're going to dive straight into that. Mo Altria was down off the back of additional news this week. It was down about 8.52% for the portfolio. Am I really worried about this? No, not really. Overall, most of the other holdings in the pie are in the green. This is the largest portfolio holding for this slice, and it's still very much in the green overall. As you can see, my cost basis has been moved up. It was about 39, but I had been buying some more shares over the past month, so I might actually pick up a little bit more in this position. This is one of my highest yielding qualified positions, so this is a very chunky dividend when it does come in. Overall, not too worried about it. It will probably slip a little bit more over the next couple weeks, and we'll see. If it gets down to my cost basis area, I will probably dive back in a little bit to it. Utilities, VST was in the green this week. I believe just about everything. Duke announced I believe they're doing a dividend increase as well this past week. I didn't have that pulled up, but I just remembered seeing that off the top of my head. So earnings came out, I believe, for Duke, AbbVie, several other companies. So we'll get to talking about those in a little bit. Duke is a position that I really do need to pull up, probably closer to the $10,000 range. I'm not sure if I'm going to hold any forever. Just need to dive back into it a little bit. It has had pretty significant gains. Overall, the utility sector, I'm heavily invested in VST right now. We'll just wait and see how that kind of pans out over the next few months. But I should probably look into Duke a little bit more over the next few months and add a little bit more to that position. And the whammy for the week is AbbVie. This was a pretty strong position that I took up. You'll be able to see here if I pull out to the all-time view on this. I started buying it when the portfolio was first started, and then I bought a little bit more and a little bit more, and then I put in a big chunk of money into AbbVie in, what is this, like April 9th to April 13th. So April 13th I put in and bought a huge chunk of AbbVie there. Now my cost basis is about $84.94 per share. You can see it went up $5 a share. It went up to $114.67. Again, this is off the back of good news. They did increase the dividend 8.5%. We'll take a look at that here real quick. So they rose the dividend up. They gave us a pay raise of 11 cents per share per quarter. With a forward yield being 5.14% if you were to buy it today. I don't necessarily like this stock at the price that it's at today. Obviously, when I was buying it, it was significantly cheaper than it is today. But this is starting the new year, so this is going to be paying out in February. So you've got until January 13th to be buying that up if you want that dividend. It is a very strong position in my portfolio. I did want to mention that I did do a weekly buy for the week this week of $800. that was into SCHD. I actually bought $1,000 of SCHD, but 200 of that was split into 2 custodial accounts that I'm holding on M1 Finance that just hold SCHD. These are for cousins of mine, and I am trying to work around teaching them some about dividend stocks and snowballing growth while they're young. And teenagers, if they learn about it, they'll be significantly more inclined to invest and keep growing their portfolios as they get into the 18 to 22 range, where they're going to college, figuring life out. It's rough. I wish I had had a mentor that would teach me some about everything here. So that's what I'm trying to do with that. The finance pie overall was down just slightly this week. Really nothing big. Como Money down just slightly. Industrials was down a little bit this week. That's mainly off the back of Lockheed Martin going down about 11%. Lockheed Martin is one that I'm going to be looking at again to bulk up, probably to about the $10,000 range. With it coming down a fair bit this past week, I will probably be looking at doing a buy on that the first week in November. The main reason being is it's a pretty high quality stock with a lot of demand, and it's got over 3% yield. It's got a low PE ratio, and overall it's a pretty high quality position that I've only got about 16 shares of. Now, it isn't a cheap stock by any means, and is it a value play overall? Probably not at today's prices, but it is something that I do want to hold in the portfolio, and I do want to bulk up the industrial pie a little bit. Overall, the real estate pie, we had some good news out of ABR. They did a dividend increase. I believe it was 1 cent per quarter on that one. This is a relatively cheap stock. This is an MREIT. This is one of those that's a little bit risky if you're looking at it from the perspective of the real estate plays, what's safest. This is one of the riskier ones that I hold. However, you can see that my cost basis was $12.75. So for my 500 shares, that's a pretty significant gain that it has gone up overall, sitting at $20.11 right now. This is a pretty significant yield as well, 6.53% if you were to buy it at the $20 price mark. It does have a low PE, but that's a little bit deceptive with these. You have to look into the FFO and the AFFO and make sure that you're actually buying something that is continuing to grow those stats. I would not necessarily recommend buying ABR at this particular price. However, it is something to consider if you're looking for an additional add to your real estate pie. Now, Vici is another one of those that I would wanted to build this up a little bit, but it keeps being kind of in fluctuation where even with good news, the stock tends to trade down a little bit. So this is one of those that I would likely add probably another couple $1,000s to over time. To just build up the real estate pie a little bit more. And let's see, we are at energy. Energy was down pretty significantly this week. You can see that Phillips 66 was down about 10%. The Valero was down 4.5 and EPD was down 5.38. Overall, I'm not too worried about this. These are positions that I've had for quite some time, and I'm not super interested in this sector. So I haven't really been investing a ton into this sector since I made the big buy into EPD. But you can see when I pull out to the all-time view, most of these are still green other than Phillips 66. So it's really good to keep perspective on this, that even when things are trading and having bad weeks, that pulling out and looking at how things have done overall since they've been in your portfolio is a really good thing to do, just to keep your mind in check and make sure that things are still overall increasing. In the tech pie, Microsoft had a crazy week. I am so glad that we hold large positions in Microsoft in our 401k account, because holy cow, it's looking phenomenal all the way around. 7.26%. You know, when I sold out of Apple, if you look at the gains, I sold out and took a huge chunk of gains on Apple. And Microsoft is another one of those that I'm not sure I would want to sell, because I feel like it is just such a high quality company. I probably should not have sold Apple when I did to go into VST, but we'll kind of see how that plays off over the next year. Like, this is a 1-year play where I haven't fully realized the gains that I'm hoping to see from the utilities play that I made earlier this year. As far as the monthly stocks go, we only hold the 3 in here. We have BST being up about 1.67%, which is solid. I'm sure that this is partially off of the back of Microsoft. Stag is down a little bit, and PIMCO was up just a tiny bit for the Dynamic Income Fund. So overall, that is kind of how the portfolio is looking this week. We did have a little bit of dividend income roll in. That was BST, I believe. Let's see here. Let's go take a look. Yeah, BST paid out $15.82. And then we will be doing some additional contributions for next week and be buying more, and just never plan to stop buying. I think I mentioned that I bought Bank of OZK. I believe this was this was Bank of OZK with their dividend. I just rolled their dividend right back in. So I did want to thank everyone who has been watching, commenting. I did adjust the music, so hopefully it's a little bit lower in the background. Once I get moved, I'll be able to set up my office and do some soundproofing and do some work on that. I am moving in a couple weeks here, so I'm going to try to make sure that I have the video up and loaded, but we may be skipping one week for the weekly review. Depends on how things go for the move. So I do want to thank everyone for watching the video. I hope that the gains and the portfolio inspire people to invest and see what type of growth that you can achieve over just a very short time frame. This portfolio was started in August 6th of 2019, and the amount of money total that's in there isn't what I want you to focus on. What I want you to focus on are the gains and the dividends earned. You can earn good dividends off of your money and get market gains at the same time. When I was looking at all of this out, I'm at about a 9.5% in capital gains overall, and then that's not including any of the dividends. Now, I just roll all my dividends back into the portfolio right now, so and I can plan to continue to do that hopefully for at least the next 10 to 15 years. So thank you again for watching, and be inspired to go out there, start investing, pick up an index fund like an SCHD or SPY-G, any of those quality funds, and start your investing journey. Thank you very much, and have a great weekend.